One.
Hello readers, this is Stephen Leeb coming to you from Leeb Group at Leeb.com. Today's action was very interesting in the market. Stocks were kind of holding their own until the Fed made their announcement around 2:15. Shortly thereafter, we saw a brief rally in stocks, brief rally in most things, commodities, etc. Then all of a sudden the market fell, and by the close, most stocks were down. The S&P was down by about 1%. Commodities, especially oil, was down by even more. What changed, we think, was a more careful reading of what the Fed did say. For one, they said they're going to maintain interest rates indefinitely, or at least for a long period of time, between 0 and 0.25%, the same as they have been saying, giving no hint that they are even thinking of raising rates. The other change that we took note of was not so much that they acknowledged that the economy had gotten a little bit better. Everybody knows that. I mean, we've seen a lot of data on that. But their forward-looking statement about what to expect in the future. The last statement, the Fed said they expected sustainable growth, or gave some indication they expected sustainable growth into the future, meaning 2010 and beyond. In this statement, they were a little bit less clear. The word sustainable was absent, and instead of talking about growth, they talked about greater use of resources. Not a big difference, but enough to suggest that the Fed doesn't feel particularly comfortable about this economy. There was no mention of shortening or abating their quantitative easing. Indeed, there was all the hint in the world that what the Fed is seeing right now, they do not necessarily think is sustainable. And from that, we think the market took its cue and slid. Again, our advice has been and remains, be cautious here. We think the best portfolio is a portfolio that has hedges in it. And our two favorite hedges remain zero coupon bonds and gold. Stay with your stocks, but be sure you have a hedge portfolio. Thank you. We'll have more next time.